Hi, everyone. Thanks so much for joining us today. I'm Julie Henderson, and I lead communications at Snap. Welcome to the Q&A portion of the day. I'm joined here with Evan, Derek, and Jeremy. In a second, we're going to open it up to our analyst questions. While everyone is getting lined up in the queue, I thought I'd get us going with one question for Evan. Evan, we heard a lot of information today from various leaders across Snap. I guess I would ask you, over the next 3 to 5 years, what are you most excited about and where are you spending your time?
Thanks, Julian. Thanks, everyone, so much for joining us today. We're so excited to be able to share more about our business with all of you. I think the thing that we're most excited about is the potential of our camera to change people's lives. You know, Bobby had this really prescient vision when we were working back in my dad's house, and he said, gosh, you know, if people use their camera, you know, instead of once a week or once a month to document a special occasion like a birthday, and instead they use their camera 10 times a day or more, then we can build a really transformational business. What we didn't expect was that the camera would go from being used, every day as a communication tool to now a way to tell stories or, see what's happening around the world on our map or create a totally new entertainment platform in Spotlight, and of course to drive the growth of augmented reality. So I think the thing that excites us the most is the unbelievable potential of the camera and the feeling we have that, now almost 10 years later in the growth of our business, that we barely scratched the surface of what's possible with things like AR and the way that they're going to drive real utility for our community in the future. And so I guess aligned with that, I've been spending a lot of my time on our forward-looking product roadmap, things that might not ship for 3, 5, even 7 years, and thinking about how we're going to build more engagement in our community and also transition to this future where computing is overlaid on the world.
Wonderful, thank you. So I think we have everyone lined up. So now I'm going to turn it over to our operator, Alyssa, to open up the queue.
The first question today comes from Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my question. I have two. The first one, Jeremy and Derek, I guess around the 50% forward growth, maybe, Jeremy, can you just talk to us about sort of the largest hurdles you sort of need to overcome across your different buckets of advertisers, enterprises, DR, and SMBs to sort of be able to deliver that 50% growth? Then the second one, you have so many new use cases across the platform now with Lenses, Discover, and Spotlight. Can you just help us better understand the incrementality of time spent across those products, and how does overall time spent per user look on the platform? Thanks.
Sure. Thanks for the question. I'll take the first part and then have Derek answer the second part. So in terms of hurdles, I think it's really around education. So for instance, we are selling to an audience oftentimes who don't use Snapchat on a day-to-day basis. While they certainly see it in and around the world around them with as many users as we have, or they have perhaps teenagers or college-age students that use it all the time, they themselves don't use it all the time, which kind of ends up being somewhat of a heavy lift in terms of education of the platform. What's been so great has been working with all of our advertising partners and developing programs like something called Snap Focus, where we're able to really distill what it is, what Snapchat is, and why it matters to this generation in terms of an investment. So an example of talking like that to an advertiser who may not use Snapchat every day is basically to say, open your phone. What apps do you see that you use the most? Is it your camera? Is it the memories in your camera? Is it your OEM messaging? Is it your map, et cetera? And most of the time that is actually very true in terms of what do people use the most. And so then when we distill that to say, now for this generation, for 13 to 34, those things are all together in Snapchat, and that is their life. And that really, really helps with education. As it pertains to AR, as you heard us all talk about today, there is a massive opportunity in AR. I think some of the developments that we've been making in AR to democratize the ability to make it, either through creative partners or through something like Camera Kit, for instance, or even our ability to certify people within large advertising agencies on how to make AR for brands is really helping with the adoption of AR, which I think previously was thought more of as something like really complex and hard to build. It no longer is complex and hard to build, but we need to educate there. So those, I would say, are opportunities for us in terms of education, both on the audience itself, what they do on Snapchat day to day, and on AR. But I can tell you that the story is absolutely resonating, and you're seeing that show up. So those would be the top two, and I'll send it to Derek for the other.
Hey there, thanks for the question. It's Derek speaking. I think the big thing I would say here as we're thinking about, the path forward on trajectory, we're at different places with different platforms, but we're very excited with the momentum that we've seen in the last couple of quarters. So if you think about the acceleration of the revenue to 62% year over year in Q3, and then to 52% in Q3, and then to 62% in Q3, we're really seeing the momentum in our platform, and we're excited about where we are with our monetization platform in terms of the products and how they're doing and they're resonating. And clearly that ties into what Jeremy's just shared and what she shared earlier today about what we're hearing from our advertising partners. So, but we have different platforms at different stages in terms of, delivering against the hurdles over time. So if you think about our stories platform, which includes Discover, obviously, as I shared earlier, that is still very early, but the most mature of the group. And then, of course, Camera and the augmented reality platform that's built in there. And those are the platforms that are really driving our momentum today. And when we're thinking about our ability to deliver against what we talked about earlier over the near and medium term, those are the platforms we're really focused on. But it's exciting as you think about over time, the ability to build upon what we're seeing from an engagement point of view on the map, and then eventually over time also Spotlight provides an incremental avenue to deliver and expand on our ARPU opportunity. So as you're thinking about the drivers over time, hopefully, as we shared earlier, that gives you a little bit bigger picture of what we see over time, both near and medium term and then longer term.
Great, thanks.
The next question is from Michael Levine with Pivotal Research Group. Please go ahead.
Just a question for both Jeremy and Derek. I thought the color you guys provided around international, especially as you're going with partners into some of these emerging markets, is actually pretty unique relative to your peers. Like, I'm curious, is there we've been in a market for X number of years, or we sort of see a revenue opportunity of a certain revenue threshold where you'd look to flip the switch and really start to put more feet on the ground as opposed to, working with partners as you were talking about in places like India and China?
Sure. Hi, Michael. Thanks for the question. So it's a couple different things. So in our more developing markets like India, like you just mentioned, we are really firmly convicted around this partner strategy. We believe that the biggest opportunity for us right now in a market like India is to continue to deliver on core product value, grow the audience, ensure that people love Snapchat, and then come in with feet on the street. So right now we're really very much at that early phase, and we're working with an awesome partner there. They've been a longtime partner with us, and we truly believe that they feel like an extension of the Snap team. They wear Snap shirts. They're very, very much utilizing our business-to-business marketing efforts and ensuring that customers in India are very clear with our value proposition. And then we do deploy feet on the street as we get to a certain, I wouldn't say a time necessarily and or a threshold, but really when that core product value starts to take hold, and we feel very comfortable that the audience growth trajectory is what we want it to be, is when we'll start to bring in feet on the street, which we do have a hybrid model in India today. In our more mature markets, so Western Europe is a good example of this, we've had feet on the street for a really long time. And what we're focused on right now is ensuring that we not only invest in growing those teams in the way that we have in North America over the last couple of years, building out the sales teams large enough so that we can do true verticalization and have that expertise that I talked about earlier today. But in addition, we know now, based on what we've seen in the growth of North America, that just salespeople aren't enough. We must support them with things like measurement, team members, with communications resources, with business-to-business marketing in market. So not just translation services, which we've been utilizing a bit before, but truly real market intelligence so that we're speaking to the actual audience in those countries in the way that is localized, familiar, and relevant to them. And then we're going to continue to invest in our product marketing managers, for instance, to ensure that the rollouts go smoothly. So in short, in the more developing markets, it's really this hybrid strategy until we get to a place where our community is ready for a full Snap monetization. And then in our more mature markets, where we have deep smartphone penetration, where our DAU is exceptional already, we will be investing in building out those support teams to ensure that we get those same results that we saw in North America over the last 2 years in those critically important markets to us.
The next question is from Doug Anmuth with JP Morgan. Please go ahead.
Great. Thanks for taking the questions. I have two. First, Jeremy, you touched on the potential to shift the linear TV market. I was just hoping you could dig in a little deeper there just on how Snap is positioned to get these dollars and also what you're hearing from marketers, just given that TV dollars have been slower to move than most expected, even as viewership has declined. And then, Evan, Bobby mentioned spectacles as an investment in the future and that the devices will get better over time. We didn't get a whole lot more there, but hoping you could give us a sense of how functionality could change and how we should think about timing there as well. Thanks.
Sure thing. Thanks for the question. So I think what's been the most important thing for us in terms of getting TV dollars is to recognize the true opportunity in front of us. So the rise of mobile content consumption and the decline of linear television are sort of at this X and Y axis now, as everybody knows. But you're right, the dollars are more challenging to ensure that we're grabbing, but it presents a huge opportunity for us. With linear television being a $50 billion industry, we certainly believe, which eMarketer says that it is, we certainly believe that we have our place in there because the Snapchat generation, it's a large and unduplicated audience. They're not watching linear television in the way that I'm used to or the way that many of you are used to. They are watching television. It's just happening in their pocket. So brand marketers do want to spend time with their customers in the areas where they're spending their most time, which is on their mobile phones. So in order to be specific about your question, like what are we doing to go after those dollars and how are we winning? It's a fairly simple strategy, which is that we are giving the video buyers what they want. We've hired a team of video experts with experience from places like ESPN and others to come in and talk to mobile video buyers in the same way that they would, and television buyers in the same way that they've been used to doing for years. And that is really resonating. In addition, we're giving them more engagement, we're giving them ad effectiveness and continued innovation in the ad product itself. And most importantly, we're giving them really compelling content across our suite of video products, which oftentimes we talk about as Just Discover, which is our hand-curated, brand-safe environment, and that is really resonant with video buyers. But it also includes Stories and eventually Spotlight. These are all video ecosystems within Snapchat. So we are now at feature parity with all of the other large players when it comes to ad tech, specifically in video, and we're continuing to innovate. We've launched goal-based bidding. We've launched unskippable 6-second full-screen video immersive experiences, and we're truly giving them what they want. In addition, we educate them on the audience, what they're doing there, and how we can actually reach the same audience with our awesome partners like NBC, like BuzzFeed, like SportsCenter, and others to ensure that they are getting the video experience, but just on the smaller screen. I think, to put it in context, what do advertisers want? They want people who are receptive to messages. They want large audiences. They want to ensure that they're reaching people who either have spend or influence spend. And we have all of those things. And I think the most important thing that we can continue to educate our advertisers on is that we have those things at scale. So when you talk about moving dollars to a platform where you have a fully engaged audience, you look at something like Will from Home, which was our originals production with Will Smith. And between season 1 and season 2 of Will from Home, we had 43 million viewers of that show. So it's really difficult to reach that kind of scale on linear. And the more we talk about that story, the more we talk about how hand-curated Discover is in particular, and that is a brand-safe environment, the more we're seeing those dollars move. But we believe in general, the video opportunity ahead of us is really huge because of the secular shifts that you're seeing generally.
And thanks for the question, Doug, on spectacles. I think the best way to think about it is a small bet on what the future of computing might look like. And so we believe that there are generally, huge transformational shifts in computing every decade or two that are really these generational opportunities, whether that's moving from mainstream to desktop or desktop to mobile. These big shifts have unlocked huge opportunities to build new platforms based on new behaviors. You'll notice that, for example, mobile phones didn't replace desktops, but they created a totally different type of computing experience and unlocked an unbelievable explosion in communication, for example, that wasn't possible before with desktop computing. So I think overall what we're trying to pay attention to is that when these big computing shifts come along, it's really important to at least make a bet on what that future could look like on the off chance that you're successful and build one of these new platforms. And we actually believe we have the foundational tools to be successful there. The three component parts to think about are one, a really strong developer platform where people are able to access tools to build new computing experiences. Two, a software platform where people can deploy what they build to reach a really large audience. And three, hardware that enables new user experiences. And so with Spectacles, we've effectively iterated through many generations of hardware devices, starting just with putting a computer on your face, evolving that to much more sophisticated capture. More recently, making sure Spectacles understand depth, understand the way that you see the world around you, and we're actually able to overlay new experiences in 3D on top of that because we understand the depth map of the environment. And as we're looking to future product generations, we try to develop a hypothesis for each new hardware product that we release so that we can continue to evolve that computing experience. The exciting thing is that we've taken a different approach to other companies because we're trying to develop this augmented reality platform in partnership with creators. So by releasing Spectacles on a continuous basis, collaborating with creators on what works for them, how we can better serve them by iterating on the hardware, I think positions us well as we go on this journey. But this is a multi-decade journey. I don't think we'll see widespread consumer adoption of new wearable hardware, maybe for 10 years or so. But what's possible, using your hands to interact in a hands-free environment, using your eyes, using your voice, it unlocks a very different type of computing experience that just isn't possible today with your smartphone. So it's worth making a bet, and we think we're well positioned to at least be a part of this massive transformation that's on the horizon.
The next question is from Richard Greenfield with LightShed Partners. Please go ahead.
Hi, two questions. Let me start with the big picture one for Evan. Reed Hastings talks about Fortnite as a major competitor for Netflix, sort of that war for time question. I guess as you think about Fortnite or YouTube or TikTok or Netflix, all the apps that your Snapchat generation loves using, I guess, are these threats to Snapchat over time? Does it push you to diversify the content and offerings on Snapchat? Like, how do you think about that sort of battle for time? And then I have a follow-up for Jeremy on that chart that Derek showed that just looked at sort of ARPU and revenue relative to Facebook, and I think Twitter was on that chart. Just wondering how much of the gap is the sheer number of small business advertisers and how to think about a time frame for closing that gap. They're obviously 10 million plus and you're not. So just how to think about the closing of that gap as a follow-up. Thanks.
Thanks, Rich, for the question. I think the best way to think about the competitive dynamics with time spent are really vis-a-vis other entertainment products specifically. So, for example, Discover, which monetizes with full screen video content, is certainly competitive with other, video services, whether that's, a YouTube or a Netflix, TikTok, or, even other forms of entertainment like, Fortnite with gaming. I think the interesting thing for us as we look at diversifying our business over time is to also compete in areas that are really utility driven, that don't actually derive value primarily from people spending time, but actually from people taking specific actions or converting to a purchase, for example, trying on augmented reality or taking action to connect with a business on our map. And so I think as you look at the full opportunity on Snap over time, only part of that opportunity, really the entertainment piece of our business, is in direct competition with some of these platforms that are oriented around driving more time spent. But as we look at, extending the utility of our business through AR and the map and our other different sorts of utilities, that those aren't directly competitive in the same way.
I'll take a quick answer here and then turn it over to Derek to talk more about the ARPU gap. But our absolute opportunity is in the sheer volume of onboarding new advertisers. Most certainly, we have a lot of room to run there globally, which is really exciting. Not specific to small, medium businesses necessarily, which I would define not necessarily as local only, although that is most certainly an opportunity with the advent of the map, although that's still very early days, but truly just businesses in general, app install advertisers, e-com advertisers, more depth with our CPG advertisers. Just the sheer volume of advertisers that come into the ecosystem is absolutely our opportunity here, and the way that we're going to close the gap. Peter Sellis talked about this a little bit in his presentation, but it's important to reiterate the flywheel that we're talking about as we look to close that ARPU gap. As we onboard more advertisers and continue to invest in machine learning, measurement, optimization at the same time, we have more ads from which to choose so that the ads can be more relevant to the customers. They convert more. Therefore, even as the absolute CPM or eCPM goes up, the efficiency either stays the same or goes down. So as we onboard more advertisers, that's a huge opportunity in closing the gap. I will let Derek expound upon that if he would like to, but that's in short my answer.
Sure, I can touch on it a little bit, and I think one of the things I would share in addition here is just thinking about this over time. So, Rich, the specific graphic you mentioned was really focused on North America, and obviously there's growth beyond that. But obviously one of the big keys here is even some of these more mature platforms are still generating approximately half of their revenue in North America. So closing that gap is, a big part of closing the ARPU gap over a longer term period of time. And then when we think about our ability to close that gap and how significant it is, it's obviously a long journey. But different of our platforms are at different places at this current stage. So if I start, with the platforms that have really driven our momentum as we've accelerated revenue in recent quarters and as we've doubled revenue over the last 2 years, that's really our Stories platform, which includes Discover, now our camera platform, which includes the AR capabilities. And those are the platforms that when we think about the near and medium term, the ability to sustain our growth rates and begin to close that gap in a meaningful way, we're really focused on those platforms today. But obviously, the map provides, as I said earlier, an on-ramp for the small and medium-sized businesses over time. And so that contributes to the longer-term opportunity. And as Jeremy mentioned, we'll be focused on building utility there in the near term. And then, of course, as I mentioned earlier, Spotlight is very exciting, but it's very early. And so we're optimistic based on what we're seeing in terms of the scale of the engagement there. But it's very early, and so we're focused on the product experience there. But over time, that's another avenue to contribute to the long-term opportunity as we think about closing the gap over the longer term. So hopefully that gives you a little bit of a sense of how we think about this in the near and medium term, and then further in the longer
The
term.
next question is from Ross Sandler with Barclays. Please go ahead.
Hey guys, just wanted to go back to where the revenue's coming from today. And Derek, you just mentioned some of this, but maybe we can dig in a little deeper. So if we look at the $2.5 billion that you did in 2020, it seems like you're saying most of that came from Stories, Discover, and Camera. So I guess first is, do you feel like you have a lot of ad load left in these three core areas? And if we look at doubling or tripling revenue from current levels, how do you think about ranking these existing three surfaces with the newer surfaces like Spotlight, Maps, and Games? Which are you more bullish on in terms of existing versus new? And then do you need all 265 million users to be active in these new surfaces in order to really unlock that potential, or are they big enough today to kind of already be meaningful contributors? Thank you.
Hi there, it's Derek. I can start here. I think that, as I mentioned earlier, obviously at this stage, as we've seen our revenue double over the last 2 years and the acceleration in recent quarters, definitely the Stories platform, which includes Discover, is a very big part of that. And we see the opportunity to continue to grow there for years to come. It's obviously a multiple story there. One is the building demand, as Jeremy mentioned earlier, from advertisers, and the very attractive ad units we have, like commercials, which doubled year over year in each of the last 4 quarters. But this is also a story about our ability to continue to drive optimization and use our inventory that's available to us more efficiently. And I shared some use cases in our 4th quarter call about our ability to target more effectively as we grow the advertiser account, and how we were able to drive CPMs up while driving down the cost per pixel purchase from an advertiser perspective. And so those things combined, which is growing the advertiser base and the overall demand, but our ability to continue to improve targeting and our premium ad units, really give us runway on that platform, in addition to obviously growing engagement over time, both here and abroad. And it's very early in terms of us investing in premium content in a number of our international markets as well. If I move over to the camera, as I mentioned earlier, it's very early for the camera, but we are seeing momentum there. And that is, the long-term opportunity we're most excited about. And we do believe the camera represents a multi-billion-dollar platform in the long term. I think the focus here is around building utility into the advertising products, and some of the momentum that we're seeing that I mentioned earlier is really around how we've made it easier to start a campaign, easier to build your creative, and the fact that those ad units have become more measurable and trackable in terms of being able to tie them directly to the actions that advertisers want to drive. So these 2 platforms, when we think about our ability to drive the top line over the next several years, are really, what we're focused on. And I think, as you mentioned, we have a lot of untapped potential beyond that. So, the map we talked about earlier, we're very focused there on building utility for small businesses on top of the large audience we've already built there. And we do see the map as a very large multi-billion-dollar platform in the long term, but we're focused on building utility for the Snapchat community and for the small businesses that populate our map in the near term. And then I think, Spotlight, we've touched on a couple of times here, but I would just say it's very early with Spotlight, but we're excited about what we're seeing in these early days in terms of the size of the audience. And one of the things that's exciting about Spotlight for the longer term is the ability to unlock additional inventory for some of the ad units that are most in demand and highest on their platform. And so we think that's an opportunity to expand the potential of business further in the long term. So obviously, there's a lot of opportunities. You start looking across the screens. In the near and medium term, we're very focused on driving that top line on the Stories platform with Discover, and of course, capturing our opportunity on the camera with our AR platform in order to build that into our biggest opportunity over the longer term. So hopefully that gives you a little bit more color on where we see the growth coming from now, but also how we see the growth coming in over the near and medium term and then.
The next question is from Lloyd Walmsley with Deutsche Bank. Please go ahead.
Thanks. I have 2 if I can. I guess for starters, thanks for hosting the day. It's been a really helpful event. Evan, wanted to ask you about the intersection of AR and e-commerce. I think Peter talked about product trial, and we've seen AR stores in the app. How far away are we from seeing like AR-driven e-commerce scale on the platform? And the second one, sort of related to that, you talked about pushing the AR Lens ads and performance objectives into the self-serve platform. Are you guys seeing adoption there from kind of smaller businesses or from even bigger businesses with more targeted buys around performance? Kind of what are you seeing there, and how far away are we from seeing that really scale as a revenue stream? Thanks.
Awesome. Thanks for the question. I'll let Jeremy take the second part. I think it is really exciting to see retailers embrace augmented reality. It's one of the first verticals we tackled with this augmented reality tooling that we have. So what we've been doing is effectively going vertical by vertical and understanding how we can really solve problems for different types of businesses using AR. And I think AR in particular when it comes to retail has a couple really compelling characteristics. One, I think it helps evolve from transaction to experience. So brands can not only, show people what they look like while wearing the clothes, but really provide an experience that's emotional. And for a lot of brands, particularly in fashion or in beauty, that sort of emotional connection to the brand is really, really important and helps with the sale process. So I think augmented reality can help evolve from transaction to experience and power that in a totally new way. I also think a lot of retailers are really excited about the potential for augmented reality to reduce returns in the future, which is obviously a huge benefit in terms of cost savings, but also in terms of the environment. And so we're doing a lot of work right now to iterate and experiment with retailers to think about ways to drive down returns by helping people, find the right fit, find the right product using augmented reality. I would say there are some blockers, to expanding and scaling that strategy right now, largely because asset creation is still a bit inefficient. So that's something we've been innovating on as well and investing in. And I think when retailers start seeing more and more ROI against their augmented reality investments, because obviously it improves conversion, but also because they can reduce things like returns, then I think we're going to find even more momentum scaling up that sort of AR try-on, those sorts of AR experiences, despite the fact that there's increased friction relative to a dynamic product ad, for example, that just ingests a catalog and automatically creates advertising for you. So all of that to say that we're very early, I think, in the development of augmented reality overall, but the results we've seen tell us that if we can continue to drive efficiency in terms of asset creation and scaling these sorts of try-on experiences, that retailers will really reap the benefits from embracing this new technology.
As it comes to the adoption of these self-service tools for AR, we're seeing really great adoption of it, largely in part due to all of the innovations we're making in the ad tech stack. So the ability to buy on a bidded basis, for instance, or the ability to bid on an outcome like a KPI or a swipe or an audience, et cetera, has really accelerated the adoption of self-serve and AR. The vast majority of our AR revenue does come through our self-serve tools now, and we're going to continue to innovate in this space to make it even more appealing for our advertisers to do that. That's advertisers of all sizes are really adopting self-service as the primary way that they buy AR and all of our other products. And so you'll continue to see more and more of that adoption, but we're really excited by what we're seeing so far.
The next question is from Brent Thill with Jefferies. Please go ahead.
Thank you. For Evan and Derek, just going back to the 50% guidance, I think many investors are asking, why set that high a bar? Why not give yourselves a little more wiggle room? Can you just talk to the confidence and what is underpinning you to be able to give that multi-year view?
Hey, Brent, it's Derek speaking. I think the first thing I would share with you is some of what I shared in my prepared remarks. Just, one, we're very focused, on building on the momentum that we've had over the last couple of years. Obviously doubling the revenue since 2018 and then the acceleration in the back half of 2020 and really seeing our ad platform and our ad products mature in terms of the features and capabilities of the ad platform, but then also the adoption of our ad products by advertisers. In terms of, the ability, looking forward, obviously, what I just shared in the prior question regarding where we see the Stories platform, including Discover, and our ability to continue to obviously not just grow engagement, but to also improve our targeting and optimization, which allows us to use our inventory more effectively and therefore continue to scale that platform over time. The momentum we're seeing with some of our premium ad units, including the doubling year over year the last 4 quarters for the commercials ad product. Obviously, we're seeing momentum there, and we see the ability to continue to drive near and medium term growth at attractive rates on that platform. And then camera, obviously, we're excited about the opportunity that we're seeing on the camera now. And I think the shift that you heard people talking about today in terms of the ability to make augmented reality advertising more measurable, more targeted, more ROI driven. And the fact that we've got, the camera being opened by 265 million Snapchatters 30 times a day to take 5 billion snaps a day, the inventory opportunity there is already immense. And the vast majority of those folks are using our AR products every day. And so, as we continue to make those ad products more sophisticated, more measurable, and deliver return on ad spend, we'll have a better opportunity to take advantage of that immense inventory potential. And then, of course, as you look out longer term, we have these other platforms that we've not begun to monetize that I've talked about today, including, the map, where we're focused on building utility for local businesses now, as well as Spotlight, which, it's very early days for Spotlight, but we are excited about the scale of the audience that we've begun to build there. And of course, the potential for that to unlock additional inventory of our most in demand and most premium ad units over time. So really, the focus is on scaling the business over time. And I think as you think about the near and medium term, it's really about the stories and the Discover platform and the camera and the augmented reality platforms and building on the momentum that we're already seeing there in order to turn that flywheel of better optimization and using our inventory and therefore being able to drive up the CPMs while still delivering really attractive return on ad spend to the advertisers. And then longer term, we have these other platforms like the Map and Spotlight that we can begin to unlock. And so hopefully that gives you a better sense of how we see the potential of the top line growth unfolding over both the near and medium term and then into the longer term and where we see that coming from and evolving over time. So hopefully that additional color, helps a little bit for your question.
The next question is from Eric Sheridan with UBS. Please go ahead.
Thanks so much. Maybe coming back to some of the investments you feel you need to make as a company over the next couple of years and getting Evan's perspective as well. Just speaking about what you see as sort of mission critical against the broader goals you've laid out today. And then Derek, maybe bringing it back to what you said during your slides about sort of mid-30s expense growth over the next couple of years and how there could be some variability around that. I want to tie back together sort of the priority investments against what might be more variable or move around from year to year against your broader goals or the outlook you laid out against the expense growth. Thanks.
Thanks for the question. I think in terms of the momentum we have in the core platform, we are really focused on continuing to build user engagement through communication, visual communication, which has really been transformational in the lives of our community because they now prefer to communicate visually rather than sending text messages and things like that. And so you're going to continue to try to onboard new members of our community through visual communication and then broaden their engagement with products like Stories or our Map or Spotlight, Memories, and of course, our augmented reality platform. And then what we're going to try to do is develop a much richer tool set for all of the different businesses and creators that use our platform. So whether that's through Lens Studio, helping people make much more sophisticated augmented reality experiences or building better creative tools so folks can create more entertaining content for Spotlight, that's going to be a bulk of our investment. And then I would say as we look internationally, we're definitely still playing catch up relative to the United States and relative to the scale of our user base internationally. And so we've got a lot of work to do to build out our sales teams, our partnerships teams, our content all around the world. And so that'll be a big focus of ours over the next couple of years. And we're excited that we've finally gotten to this point. When we first went public, we were worried that we couldn't afford to scale really rapidly outside of the United States. And we had some trepidation about doing that. And now, as we look at how we've been able to manage our cost structure, as we look at the engagement we're seeing outside of the United States, all around the world, we're really excited about that opportunity. And there's a big, I think, runway ahead of us to continue to grow.
Hey, and then I think just to fill in behind that, to provide some additional context, one, I did say and share in my prepared remarks, and you clearly picked up on it. We do intend to invest heavily in our business in the coming years. And we shared some very specific sort of estimates around what we thought we'd see on the OpEx side in 2021. I think the important thing here is that we've made a lot of financial progress over the last couple of years. I've talked a lot today about how we've scaled the top line. But as importantly, we've driven approximately 47% of the incremental revenue over the last 2 years down to the adjusted EBITDA line. And so that's allowed us to, number one, achieve the goal we set for 2020, which was to achieve adjusted EBITDA profitability. But we've also been able to deliver significant improvement in free cash flow. So we're getting to a point where we're on the verge of being able to self-fund our investments in the future of the business. And so as we've gotten to that point, we're now thinking about our investments in the future in balance with what we believe we can deliver on the top line, so that we can continue to make financial progress, but try to pull forward some of the investments in capturing our ARPU opportunity and our long-term product opportunity, including AR and content and the growth in our community. And so when we look forward to this coming year and we're talking about the investments we'll be making in all of the things that you heard about today, that does mean we're going to be investing in content, and certainly we're doing that in the near term in a fairly significant way in the support of the launch of Spotlight. And obviously we're excited about the early returns we're seeing there, but it is a big investment. And, we're trying to grow our variable costs, as efficiently as we can by scaling efficiently alongside that to drive out the gross margin. And you've seen us balancing these things in the last couple of years where we've been investing in content, but scaling efficiently. And so we were able to add 19 percentage points to the adjusted gross margins in the last 2 years by scaling efficiently alongside those big investments. Now, obviously, we expect that margin expansion to be much slower in the near term as we make these big investments to support the launch of Spotlight, but we're excited about the returns we're seeing in the early days. And then on the OpEx side, obviously to deliver all of the product roadmap that you saw today, and to capture our ARPU opportunity, we're going to be making significant investments in our team, both on the engineering and product side to bring forward each of the platforms you saw today and deliver the AR future, but also on our sales and support teams that are going to allow us to grow our advertiser base and support our advertisers over time, including the investments we want to make internationally to really build up in a way that we did in the United States in more recent years. And then, of course, marketing. Both investments in marketing to support our partnerships with advertisers and grow our advertiser base, but also to help seed our growth in some of the international communities that we've talked about as being our focus for the time forward. So I really hope that, one of the things you'll take away from today is that we are looking to achieve a level of balance here where as we become more confident in our ability to deliver the top line, we're going to invest in the business alongside that in order to capture our opportunity and seek to continue to make financial progress while doing those two things together. And so hopefully that gives you a little perspective about how we think about investing in the business, in addition to what specifically we're focusing those investments on.
Our last question today comes from Heath Terry with Goldman Sachs. Please go ahead.
Great, thanks. Evan, you've obviously come through a period of significant innovation in terms of products and ad services. You referenced earlier in one of your answers the forward product roadmap. I guess just obviously not expecting you to announce any of those products here, but just how would you characterize it in terms of the scale of what you're seeing in front of you versus what we've seen in the last couple of years? And to the extent that there's any sort of high level or even lower sort of shift in focus that you've gotten to this point in terms of your priorities.
Yeah, thanks for the question. So I think largely the platform itself has been roughly sketched out. I'd say the different aspects of the business are, in varying stages of their development. So Stories, for example, which has been around maybe the longest of all of our platforms, is much more mature. So, it's a big business for us. We're continuing to develop tools for advertisers and, our content partners to make better content. Augmented reality is maybe a couple years behind Stories, but, huge amount of headroom there. Again, building a lot of tools for our creator partners and of course for advertisers. And then you look at different parts of our platform, like, the map, which, is just in the early stages of, becoming more of a platform by onboarding businesses, helping people take action to connect with those businesses, or things like Spotlight, which is actually just, a couple months old and still really in its early product development phase. So I would say, the different parts of the service, while they are pretty clearly outlined at this point, are definitely at varying stages of their development overall. I think the exciting opportunity for us in the coming years, as each of those discrete platforms evolves, will be connecting them together. And I think that's really where the powerful opportunities are, connecting the map to our augmented reality products, connecting our augmented reality experiences to the ways that people make content to help inspire them and help them build more interesting creative tools. So the way that the platform links together, and of course with things like communication, so that people can share all these experiences really easily. Those are things we're really excited about, and that's maybe the way to think about how we connect the dots 3 to 5 years out from now. So I'd say like the core building blocks are there across the application, and a lot of the work that we're doing now is evolving each of those platforms, and then a little bit later on connecting all of them together, which we think will create a very unique and cohesive user experience that allows people to do things that are not possible today in a more siloed app environment. And I guess that's the last question. It's probably a good time for me to say thank you so much for joining all of us today. We're really grateful that you spent time with us, and we look forward to seeing you all soon. Thanks so much.